At the launch of the 22nd edition of Rwanda Economic Update, organized by the World Bank, a panel discussion was held to explore how to mobilize savings to boost the private sector in Rwanda. The panelists included Dr. Diane Karusisi, the CEO of Bank of Kigali, Herbert Asimwe, Director General, Banking and Non-Banking at the Ministry of Finance and Economic Planning, Dr. Regis Rugemanshuro, the CEO of Rwanda Social Security Board, Dr. Moise Bigirimana, Manager Financial Inclusion at the National Bank of Rwanda, and Zano Mataruka, Resident Representative, Rwanda and Uganda at the International Finance Corporation.
Let me first turn to Dr. Diane and ask her this question about, the report has been mentioning these recent developments in the banking sector that has enhanced saving mobilization, especially in terms of the percentage of Rwandans utilizing the banks for savings. Yet the overall savings rate in the country remains low as compared to its regional peers. We saw that it was way lower than what was the story in Tanzania and other such countries, Ghana, etc. From the banking sector perspective, what do you see as the major challenges to attracting more savings from households and firms in Rwanda?
Thank you very much for having me this afternoon. Obviously, as a banker, savings are critically important for us because our job is to intermediate savings and deploy them into investments. So if there are not enough savings, there's nothing to intermediate, right? You cannot deploy this money into productive investments and loans, etc. So it's actually very critically important. So it's good to see that we are attracting more clients that are saving. But I think the major challenge has been, first of all, is not enough channels. Today, most banks cannot enable people to open a savings account on channels, right? I'm lucky that, BK, at least I can say here that you can open your app and start saving and open a savings account or even do a term deposit. But it's not the case for most banks. So this is something that we need to work on. The other thing is that we've not been innovative and creative enough. Because when you look at our population, our clients, most of them are young. And we've not been able to design savings products that are attractive. I think we've seen in other markets things like gamification of savings, save as you pay or save as you earn, things that are seamless. You don't feel that you're saving, yet you're actually saving. So I think we've not been very innovative and creative in designing savings products, but we are catching up slowly. And I think in the next couple of years, not months, you will be able to have products that are attractive to the youth, and they'll be saving without even realizing that they're saving and supporting the economy. So I think that creativity has been lacking, and that we are working on that. Finally, I think we need a lot of awareness. People don't really understand how their micro decisions, allocations of their money into savings or investment, affect the macro view. So I think there's a lot of awareness and education that has to go out there, telling people that savings is actually almost a patriotic duty because we are able to enable development and transformation. Thank you.
Thank you so much. I think you really pointed out a very important fact about being more creative, innovative to capture, what the youth is, and some of the things which Peace also presented in terms of gender products and how you could, turn the micro to the macro issues. Yeah. Let me turn to Herbert now and ask him that among the key financial products that have potential to increase domestic savings is the insurance sector, but the uptake remains low. So what are the main challenges that you see are facing the sector, and what do you think the government is doing to strengthen the sector?
Thank you very much. I want to agree with you. It remains a challenge. The penetration of the insurance sector remains low at 2%, which gives an opportunity to the insurance players of, capturing the remaining 98%. Globally, the penetration of the insurance products is around 7%, 7.2%. It's only South Africa that is around 12%, but that has come with a lot of product innovation, awarenesses that come with such complex products. Talking about the challenges that we are looking at, one, from the demand side of these products, we've seen Azure has eligible members. Each Azure has a member that has subscribed fully to their account. We give them a life insurance. And this is done, again, to educate the Rwandans about the importance of insurance. And they have tested it. And with this, we continue to see that people are coming up and asking for it again, which has, impacted positively the uptake of Azure Hazer. So on the demand side, on the supply side of these products, we haven't really seen that innovation with more products on the market that really pull everyone in to uptake. So we are yet to see that innovation with products that are really interesting for the citizens to take up. But also to say that the insurance sector is also trying as much as they can to continue to skill their teams. They're investing in actuarial scientists and analysts to come and do the numbers and push new products to the market. But we haven't seen that. But I think going forward, we are seeing a brighter journey in the coming years.
Let me turn to Regis and ask him that in terms of this Azure Hazer scheme, what are the next steps to increase the number of participants and their level of savings into the system? What do you see about that?
Thank you, Dr. Abba, and congratulations to World Bank for organizing another successful edition. About Azure Hazer, much has been said in regards to where we are, over 3 million savers and close to 60 billion Rwandan francs in savings or asset under management in less than 5 years. But looking ahead of what's being done today, as more work needs to be done to increase the saving rate domestically. A lot that is really being done today, especially in partnership with some of the partners here in the room, including the World Bank, is the improvement on the value proposition. There's room to make the product more attractive, especially in comparison to the alternatives available, like the Ibimina, the savings groups, or other informal sectors. Some of the upcoming features will include a dual account, where we allow members to access part of their savings easily, depending on a ratio of how much they have saved. We will continue to make sure we're investing safely and cautiously to make sure we are guaranteeing higher returns in comparison to what's available, but also to ensure the easiness or smoothness of accessing the products. So we are improving today. In a couple of weeks, we'll be launching Azure Hazer 2.0, a new, completely much better experience that allows local people to save, but also diaspora as well. In the long run, what we are working on is to work with the Ministry of Education to teach the culture of saving from a young age, where from at the same time you're learning the values of our country and the whole civic duties and rights. You're also learning your I like what Dr. Diane said about saving is one of the most patriotic things you can do, and assuring that these behaviors and the benefits of it is taught from a young age, so that from the first franc you will make, you probably think of saving a third of that into your long-term savings.
Rwanda, in fact, has made notable progress in expanding digitalization and promoting formalization of the savings group. Could you tell us what's been the role of the BNR and how do you see the next steps in promoting the financial inclusion agenda, getting in more savers into the formal side? Thank you.
Thank you. Well, when you talk about savings groups that are informal, the first challenge that people face is knowing how do we get data from them. So the central bank started with availing data to whoever is in need on these savings and credit groups. Although they are informal, they work with different practitioners, NGOs. We appreciate the collaboration that we have with them, and we have been able to create a map. It's called Savings Group Map, Savings and Credit Groups Map. So you can go to that map and know how many members are there. As of 2021, we had more than 2 million members, and they have been able to save 49 billion. This is a huge amount. And more than 70% of these members are women. So why have we created this map? It is to make sure that financial service providers who can be interested in these savings groups can know where they are. And they are able to view this by location, at least by sector level. We will extend and make sure that we are able to view this at least at village level. But as of now, you can have the view at sector level. But having data itself, again, if it is not useful, it is meaningless. So it only becomes useful when people who are supposed to use this data are using them. And through this data collection, we have added a component of asking ourselves. We have seen that fintechs have been interested in digitalizing these savings groups, offering formal financial services to them. And we have collected data. We have added questions on the need of knowing like how many of these groups are digitalized. Among 90,000 groups, only 2,000 were digitalized. And so we said then there is need to digitalize these groups. So we have drafted the savings and credit group digitalization roadmap that is yet to be launched, and it is in line with the National Financial Inclusion Strategy that is yet to be launched as well. So that's one. Two, we have been able to develop a directive that supports fintechs that are interested in digitalizing these savings groups. We used to have challenges that, these groups, when they save, the money is collected and deposited on a trust account. They call it a trust account, but owned by the fintech that serves them. So that was a challenge. That money was belonging to the fintech and not to the members. So we have developed a directive, at least to make sure that these group members are protected, and we are advocating, we are conducting awareness to these groups so that they can join formal financial services. But also we are calling financial service providers to have a look at these groups, to know that these people have been able to save. They have the saving culture. They were able to save. They take loan and they pay back. So this is a segment that should not be ignored. Thank you.
Thank you very much. Yeah, I think it's really important to have a knowledge, you need to have the data, but you rightly said, if it's not used, what's the point? And I'm also good to hear that you also have the scheme of protecting the members, because that's really key. It's informal sector, these are small savers, and they need to have assurance that their deposits or their money is safe. So let me turn to Zanu and sort of ask him on a different scale in terms of, the role of IFC's engagement has been basically on development and deepening the capital markets in Rwanda, and which is the other side of the equation. So could you tell us how this engagement has contributed to promote domestic savings mobilization and basically close the gap in terms of long-term financing in Rwanda?
Thank you very much for the question, because this is a very important program for us. We have a project in Rwanda called the Rwanda Capital Development Market Project, and the main emphasis of that project is to facilitate access to long-term financing, particularly for sectors such as housing, industry, and SMEs. And under this project, we've got 4 main objectives. One is to increase the secondary market in the trading of government bonds. 2 is to increase the supply and issuance of non-government bonds. And 3 is to develop and broaden the professional and investor base in Rwanda. And lastly, to also increase the capacity of regulators and market makers. And I'm glad that a number of the people on the panel, they are partners on this project. Now, for example, if you look at the money market, some of the things which we've done under this program is we've conducted an assessment of money market developments in Rwanda and submitted our recommendation to the central bank. We've also looked at the feasibility of introducing market makers in Rwanda in order to enhance secondary trading and liquidity. We've also looked at the potential of introducing on a pilot program, the market making pilot program, including the modalities and eligibility criteria. In addition to that, we've also looked at introducing the Global Master Repurchase Agreement, its feasibility in Rwanda. But in addition to that, we've also conducted a lot of trainings with some of our partners in areas such as asset allocation, bond and equity valuations, real estate, and so on. All these issues and ESG considerations, which are quite important today, all these issues are designed to deepen the capital markets in Rwanda. We've also explored, again, with some of our partners, alternative investment vehicles as a way of mobilizing the savings. So we believe that through this program, which is one of our flagship projects in Africa, it will help in deepening the financial market. Because, as you rightfully pointed out, you can have the savings, but the savings need a home. Where are you going to invest those savings? Yes, you can invest in a bank, but people need quite a number of potential investment vehicles in order to being incentivized to make the savings. Thank you.
Let me ask you one more question that, many businesses in Rwanda require local currency financing for their expansion programs. So what lending instruments that IFC have to provide for this kind of required lending?
We have 2 primary instruments. We have funded solutions and non-funded solutions. So the funded solutions, this is whereby we provide the loans directly, whether in local currency or hard currency. Now, the non-funding solutions is, for example, where I would work, for example, with the Bank of Kigali to take some of the risk off their balance sheet through risk-sharing facilities. Now, what we found, as I said earlier on, industries such as the construction industry, housing industry, and so on, what they actually need is local currency financing. And a few years back, we issued one of the first local currency financing bonds in Rwanda. And since then, we've issued it in a number of countries. Of late, we recently issued it in Zambia. And currently, we are actually working on doing our second issuance in Rwanda. Basically, what it does is, because of our AAA rating, it allows us to attract investment at very favorable returns, which we're able to then pass on to some of our clients. But for me to be able to do that, I need a pool of investments so that when the money comes in, I will be able to deploy it. Thank you.
Thank you so much, Zanu. So let me look to the audience if there are questions there for our esteemed panelists.
I think what needs to be done is understanding the whole ecosystem in regards to customers and people who are in the informal trade sector. One key thing that always comes out is access to credit. They need money. They need money to do their businesses. They need money to expand their businesses. That access to credit is always a big, big question and something that a lot of business entrepreneurs are always looking out for. A good example is that is currently happening in Kenya with what is called the Hustler Fund. So the banks come in and innovate around the money that is there. So within HOHESA, you have the banks that come in and via the banking platforms, they can be able now to on-lend digitally to the population at large, and the government can also intervene and also provide money towards that specific revolving credit facility.
The informal savings that are greater than formal ones. This really somehow left me uncomfortable in terms of sustainable planning on the side of policy making. What's really kind of mode of advantage or benefits distribution model are you going to incorporate in your innovation, whether technological or managerial innovations that you are planning to have in place? Thank you so much.
I think it was more of an intervention and an idea on what we could also consider. In the design of Ejoheza, for example, we designed the scheme in a way that it speaks to the people and their needs. We spoke to them and we designed the scheme for them. With Ejoheza, you're able to access up to 40% of your savings and be able to use it for small business. You're able to use the same money. If you don't want to take it out, you're able to take it out as a collateral. RSSB, Regis will talk about it. They will print your collateral that you will take to a bank and be able to access a cheap credit. So those are some of the things that we innovate with such schemes to be able to enhance credit to the private sector. But most important, credit to the people that earn, less income. Just to also assure my learned colleague, the researcher, that Rwandans are saving. Actually, Rwandans are saving. Up to 86% of Rwandans, according to our Finiscope, are saving. They understand the importance of saving, and they have, opened up, bank accounts. They have opened up accounts with Ejoheza. Ejoheza is a 3-year-old baby, but as we talk right now, we have about 3 million savers into Ejoheza that have saved, up to 56 billion. This is money that is out there. These are savings that the banks are accessing, the borrowers are accessing, and these are also contributing to the bigger term deposit that is, also around 753 billion. This is hard cash that is from the savers, from our savings that we put in the banks, but also with our colleagues at RSSB. So again, just to make it clear, the informal savings are not anywhere close to the formal savings.
And the reference to the Hustler Fund in Kenya, to which we've been talking and learning from each other. What we are doing, while the facility is embedded within the design of Ejoheza, what we are doing more or better is to make it more accessible. While this is available, most members either might not be aware, so there's a road to more awareness, but making it easier for banks to innovate around to what you refer to. There's somewhat what we have started doing, not just on Ejoheza, but also on actually formal pension fund, integrating with banks to allow them to create credit scores, for instance. If you know how much someone is earning on a regular basis, their work history, stability, how much additional saving they have into the Ejoheza, or how much just purely savings they have into Ejoheza if someone is a farmer working in a mine and looking for that small loan they need. We want to make it easy, where in Rwanda you also start getting, and I want to congratulate the Bank of Kigali for being one of, but if not the first bank to not only allow you to open an account on the go, but also allow you to borrow on the go. And by availing this data and helping our member be aware of how much, through any of the respective banks that will integrate with us, how much they're eligible for, then that value proposition I spoke about earlier, it becomes more evident. People become more aware, and they get more incentivized to save more because they can see, on the other hand, what I get. Because ultimately, while people are saving for the long run, they have basic needs they have to fill today. That tuition fee, that transportation, when the salary is not there yet. So 100% agree with you. Good news is that it's in the making, and want to encourage other banks also to seek that partnership because we're open, and learn from some of those banks that are ahead, are innovating and doing. But it's in the making, and soon, hopefully, we'll have more offerings around that.
There's a question that you actually added, saying how can financial service providers, tap in this segment? I'm not quite sure I'll be the one to respond to this. Maybe, I don't know if you can take it, Dr. Diane. But at least focusing on fintechs, the central bank has put in place the sandbox regulatory framework. So we encourage innovation, and we make sure that whoever is having innovative ideas, not only to serve saving groups, anyway, it's not for the sake of saving groups, in different areas. Recently, we have called for sandbox focusing only on insurance. So we want to encourage innovation, and innovation that brings solution to the existing problems. So how can financial service providers innovate? I think the regulatory framework is open. We encourage this, and we are seeing innovation. There are some good progresses, but still we have a long way to go.
I don't think informal is bad, and I don't think we want to convert informal into formal. I don't think that's our job. What we need to do is to design products that's attractive to anyone. When you look at the disruption we've seen in the past probably decade, where banks were only opening accounts for people like the ones that are sitting here, and not actually going down to the Umuturaye. We've seen now the telcos have come, everyone can transact, and irrespective of they don't ask you if you're informal or informal, right? So I think that's where we need to go, and be able to design products that are attractive to everyone. And we need to be smart about it. You cannot just wait for people to graduate for you to serve them. So you need to actually find them where they are, discuss with them, understand their needs, and design products that are not only attractive but also accessible to them.